55%. I understand why you guys are telling me to raise my rates here at Phil's Gang, but we haven't raised our rates since 2001. Hi, I'm Phil Grandy at philsgang.com. I'm not going to raise my rates. Our membership's been $39.95 since 2001, and for a good reason. So that you have enough room that when you do make money here at Phil's Gang, and you will, because you're going to learn how to short stocks, that there's enough room to send some money to St. Jude. That's why we never raised our price. And that's why we give you good value. So, you want to continue with good value, good information, be on the right side of the market? Join my gang, philsgang.com, where the price has not moved, where we fight inflation. philsgang.com.
These are volatile times in the stock market.
Market's up 200, then it's up 800, it's up 700.
How do you get the facts when investing?
Hi, I'm Phil Grandy at philsgang.com. If you're confused about the stock market, get unconfused. Go to my site, philsgang.com, and listen to my radio show every weekday at 3 Eastern. What is the market going to do? We know exactly what the market's going to do.
Phil's got the answers at philsgang.com.
There's no need for you to be losing money.
Check it out, philsgang.com.
I believe that every single human being with a laptop computer and an internet connection should be required to give trading at least a shot.
Following Phil, his charting system has really been a huge impact on my career and my life.
I believe that every educated individual on planet Earth.
I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents.
Should do this. It's not for every single human being on Earth. I know this. But it's one of those things that you should try, because if you happen to get it right, if you happen to be one of the ones that this is for.
Follow the money. Follow Phil Grandy.
Oh my God.
Hi, I'm Phil Grandy at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free.
What's in front of you is a life of incredible joy, freedom, and independence.
Philsgang.com.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grandy.
The economy has done better than expected. We are not in a recession. Inflation is coming down, and interest rates are close to peaking.
That's unbelievable. Unbelievable. Does she really believe that? The economy's doing better than expected? What? Remember they said that the earnings were going to come in at negative 6%, but hey, they came in at negative 2.3%. Wow, let's party. Let's throw another party on that. That's a great news, and we'll run the market another 1,000 points on that. It's amazing. I mean, all this happy talk. And what happened after all this happy talk last week? What's going on with the market? 121 points, 179 points. Where's the 500, 600, 700 follow through? I mean, this is just amazing. They grab at anything. They grab at anything. And the market is, the economy's done better. No, our GDP is horrible. The GDP, as I said, our growth, we're not growing. When you stop growing, you're dead. Remember, an economy is like a shark. You got to keep swimming. And our economy stops swimming. When our economic growth is 1.3%, that's not growth. But I want to get back to, I get a lot of emails. Even though my gang, they're doing very, very well because even though I keep telling you, we're going to take out the October 13th low. No question about it. Not in my mind. No question at all. But even though I keep saying that, remember, we've been long all the five big tech stocks since January and February. That's what we got in early before anybody else did. So we're still in those tech stocks. We're taking profits. So my point, just because I feel we're going to have a crash doesn't mean we sit around here and not follow the money. If the money's going in, remember, I always tell my gang members, as soon as the market opens, lose your opinion so you don't lose money. So even though I talk about how I believe this, and I'm going to tell you why we're going to break through that October 13th low in a second, but it's going to happen. And even though I think it's going to happen, we don't sit back here and not do anything, not buy stocks. We did terrific on all those five big tech stocks. We rotated out of them, took profits last week, put our money into some leisure stocks. We bought cruise lines. Those are up about 17% right now. Our airlines, they're doing well. So again, as I say, just because I tell you I expect a crash doesn't mean we're not buying stocks. But let's talk about, everybody keeps asking, why isn't the market crashing? What's holding it up? And the simple answer is liquidity. We're sloshing around in so much liquidity. And when you have massive liquidity in your market, in your economy, then you got speculation. And that's why you're seeing everybody going after the same five stocks. That's what's holding up the whole market. But it's the liquidity. And there's been 4 events that occurred since 2001 that all has to do with liquidity. That ran this market up 1,400%, the NASDAQ, and 365% the S&P since 2008. All has to do with liquidity. That's what drives the market. That's what's been driving it. Not earnings, not economic GDP growth, but just keep pouring in more and more liquidity. So when you have that kind of liquidity in the market and that money, so you always have speculators who are going to go and take that money and buy stocks. So as I say, we're going to have a crash. But as I pointed out yesterday on my radio show here in my podcast, a market can't put in a bottom until it fixes what caused the crash to form that October 13th bottom. Remember, we went down 38% starting in November 2021 and to December 2022. Here we are, June 2023, and we still haven't gotten that entire 38% back. We're still about 14, 15% away from gaining that back. That's incredible. That's terrible. The problem, as I say, for the bottom, as I pointed out, we have the same problems, like I said yesterday, when what caused the crash of 38%, the same problems exist. The inverted yield curve, historic deficits, historic debt, historic trade deficits, earnings are horrible, earnings are contracting, the economy's contracting. I can go on and on. Terrible inflation. We're spending 40% more than our tax revenue, 40-year high inflation, all because of liquidity. Now, to understand this delay in the crash, you have to understand liquidity. So we got to go back to understand liquidity, how important it is to the market and why the market's going to crash. Let's go back to 9/11. When Bush was president, baby Bush, and 9/11 occurred, blew up the economy. Instead, he refused to go into a recession. Instead, he decided, let's create a housing bubble. Let's give everybody a house. He flew up to Atlanta, told everybody in Atlanta, we're going to give everybody a house. Doesn't matter if you have a job or you got bad credit. You're going to get a house. Well, how would he do that? At the time, the liquidity we had was only about $5 trillion in the supply of money that we have. It was only $5 trillion. So how is he going to create this rally? Well, what he did is, the first thing he did, he increased the money supply. By the way, That's the first, that's inflationary, but let that be it as it is. So so what he did is he increased the money supply to use that money supply, so the Fed would take that money and purchase mortgages from the banks. Their balance sheet. They'd go in and say, look, give me all the mortgages. They call mortgage-backed securities. Just think of mortgages, okay? So they bought all the mortgages from the banks. Now the bank is loaded with money, liquidity. Their reserves increase. No longer do they have the mortgage, they have a pile of cash, and they said, okay, we're going to arm you with low rates. The Fed's going to drop the Fed rate from 6.5% down to 1.5%, and that way we'll get the 10-year Treasury rate to drop real low, and then we'll set up the 30-year fixed rate so low that everybody's going to buy a house, and we're going to give them easy access to credit. They can even decide set their own payment. They can set their own payment if they want. You remember all this crazy. And so Baby Bush said, let's give them easy access to money, mortgages, and give them easy credit so everybody can get a home. Well, 2006 to 2007 comes along. Soon the mortgage industry became more crooked than a corkscrew. Defaults started. Everybody was bundling. Jamie Dimon was the worst. Everybody was bundling bad mortgages and getting the rating agencies, pay the rating agencies off, put on a AAA rating instead of a D or an F, and then sell them to pension funds. You know the whole story. I don't have to go over it. My point is, what created that first housing bubble? Money supply. You had to print that money. You had to increase the money supply. More when I come back. And some stocks.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's Gang.
When I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money, but more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that is taken away. It just gives you some hope.
It's just a nice feeling to put your energy into something that really does genuinely make a difference in a child's life.
There's just no greater gift. If we have the ability to help, then we have a responsibility to help.
Finding cures, saving children. St. Jude Children's Research Hospital. Find out how you can help at stjude.org.
What if you could have an in-depth understanding of the stock market just like the pros? Well, thanks to Phil Grandy and philsgang.com, you can. philsgang.com offers comprehensive, up-to-date market information designed to help you understand and anticipate market behavior. With philsgang.com, you'll build your investing confidence even through down cycles and periods of uncertainty. Go to philsgang.com. philsgang.com today. 877-600-GANG. 877-600-4264. You want to invest your money and grow your wealth. How do you invest intelligently? Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level. Our team is comprised of successful investors, all with proven track records. Phil's Gang software is easy to use, painless to navigate, and tells you exactly when to buy and sell to help maximize profits. Learn about common market mistakes and how to minimize them. Phil's Gang has successfully taught tens of thousands of investors how to navigate the market with confidence. You don't need to be a seasoned investor to benefit from the Phil's Gang platform, no matter what level of investor you are. Phil's Gang strategies for investing are designed to put you on the path to success. Sign up for a 10-day free trial to see our platform in action, avoid market pitfalls, and start winning with Phil's Gang. Learn more at philsgang.com. That's philsgang.com.
Did you know breast cancer kills 113 people every day? That's unacceptable.
African American women die from breast cancer nearly 41% more than Caucasian women.
That's unacceptable.
Breast cancer is the leading cause of all cancer deaths for Hispanic women.
Breast cancer is unacceptable.
Together with Susan G. Komen, we're committed to reducing U.S. breast cancer deaths by half.
And we're going to do it by 2026.
Visit Komen.org/unacceptable.
You can be a successful investor in the stock market by knowing what the market is going to do.
Hi, I'm Phil Grandy at philsgang.com. God, you go nuts listening to these shows on TV, Kramer, any of them. I mean, they're giving you total garbage. Garbage in, garbage out. One day they tell you, buy this stock. Next day, don't buy this stock. Then you have two people on the show. One guy saying buy it, the other guy says don't buy it. So the question is, what the hell do you do? Well, we don't have questions here at Phil's Gang. And they never have to ask the question, what do you think the market's going to do? My members always know what the market's going to do because they've learned how to follow the money. That's right. Follow the money. You don't follow fundamentals. You follow the money. And what is that? That's volume. That's the buyers and the sellers. And the other thing, you got to learn how to sell a stock as well as buy a stock.
Follow the money. Follow Phil Grandy.
Check it out, philsgang.com. Go to my podcast, YouTube, and Rumble every day. That's philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Welcome back to Phil's Gang. So we're talking about today, if you understand liquidity, then you'll understand this whole stock market is nothing but a big bubble. If you don't understand liquidity, then you're going to fall in the trap, and you're just going to, you're going to get hurt. You're not going to be prepared for when the market corrects. Now, as I said earlier, we know the market is going to correct big time. I think it's going to take out that October low. We don't sit around here and not buy stocks. In fact, I was just checking during the break. If you take Apple, between January and now, we got in at two different times, a 10% return and 18% return. Microsoft, between January and now, we got in three different times. We had an 18%, 7%, and 13% return. And we purchased we took money from those big tech stocks, rotated to the banks, and rotated to leisure stocks. We bought NCLH, a cruise line. We're up 22%, and we're now taking profits on that, going to just keep a little bit on with a stop. Boeing, we did terrific with. That's taken off big time now. But the market's going to crash. And if you understood liquidity, what brought this market where we are from 2001 is strictly liquidity. And liquidity is going to go away. And what's really funny is, on one hand, what they're doing is they're raising rates to tell you they're taking liquidity out of the market. But they're putting liquidity in. So, again, as I said, we would have never had that 9/11. After 9/11, Bush would have never had that housing bubble unless they increased liquidity so they could go in and buy mortgages from the bank. The Fed goes buy mortgages. Now the banks have extra cash, and they tell the banks, we're going to drop rates, go out and sell to anybody you can a house at mortgage. That's how that happened, okay? Then the housing bubble popped. and people got wiped out of $8 trillion in housing and stock. And then the Wall Street elitists, they wanted to get their money back. They lost money between 2008 2009. So they didn't want, by the time Obama came in and Biden, they didn't want a recession. So they said, look, why don't we create a stock bubble, just like we created a housing bubble. Here's what we'll do. What we're going to do is we're going to do what we call QE, zero rates. So all that means is they're going to print money, and then they're going to take this liquidity. There you go again. Without this liquidity, they never could have done this. We would have never had this big tech rally of 1,400% and 368% in the S&P. So they printed all this money, they added to the liquidity, and then they started to buy treasuries to get interest rates, get yields down. And then they could sell money to the CEOs free, zero rates. So they could go in and purchase their own stocks, reduce the amount of shares they have outstanding in their stock. That way, when they reduce their own share count, then what happens, earnings go up artificially. And then it pushes your stock price up artificially. That's why it used to be illegal for years, because all of a sudden a company's stock's going from $10 to $30 to $40 to $50, and all you're doing is creating a bubble. It was illegal. You used to go to jail for that. Well, that stopped when Reagan came in, and he made it legal again. So again, my point is, we could have never, in 2008, remember the first QE, QE1, QE2, QE3, the twist rather, and then finally QE4, which we call QE3. So that would have never happened. We would have never had this rally. Never. If it wasn't for more liquidity. Remember, we started out, we had in the market, in the economy, about $5 trillion in liquidity in 2001. So after Baby Bush blew up the housing market, and again, he needs liquidity to do that. Now they got more liquidity, put more liquidity in the economy to do zero rates so that CEOs could buy their own shares back. By buying their own shares back, earnings go up without having to have earnings or profits. And then stock prices go up without having to have earnings or profits. So we started with that. And then what happened is, as we got to from 2008 to 2014, with the first $3 trillion of new liquidity, the market went up 170% from 2008 to 2014. They said, let's keep doing this, even though Obama said that we'd only do this for maybe 2 to 6 months. 2 to 6 months, 2008 to November 2014 is more than 2 to 6 months. 170% they rate. Let's keep doing it. And they did. And they kept adding liquidity to the market so they could keep buying treasuries, get those interest rates to zero, keep doing QE. So then Yellen, now remember, the first housing rally that we had would never happen without all that liquidity. And the stock tech bubble would never happen without this liquidity. So remember, everything is going up, has nothing. It's called unearned increment. It's going up without earning anything, like magic. So then Yellen in 2015 gets nervous. She raises the zero rates to a quarter. 2016, another half. 2017, another 1.5. And all the time she's saying, oh, inflation, don't worry about it. It's transitory, it's transitory. Powell jumps in 2018. He jumps up to 2.5%. Then he got scared, pulled it back 2019 to 1.75. But they both said it was transitory. A big lie. Now what happens? 2019. Boom, 2020 comes. COVID hits us. COVID, right smack in the face. So the Fed drops the rates back again. Okay, make sure to get all the way back to zero again. To a quarter. So what do? The first thing they do, hey, it worked for Baby Bush. Let's create another housing boom like Baby Bush did between 2001 and 2006. And they did. So let's start another housing bubble to make it look like the economy's growing. And so homes increased from 2020 to 2022, some as high as 65, 70%. Pure inflation. What's going to happen with that? I'll tell you when we get back. Join my gang, free for 10 days.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. When making wise investment decisions, Phil Grandy has some sound reasons you should join Phil's Gang.
You know, when I started this, they asked me, okay, can you explain to people why they should join the gang? Gee, I thought about that. And I guess to make money. But more than that, to get good direction on which way the economy's really going. We get so much crap, so many lies, how great the economy is and how great the tech business is, and when it's not. The problem is we have too many people in Washington and in this industry that just don't tell the truth. The truth is everything. And here at Phil's Gang, we stick with the facts. We tell the truth. We make sure our members, are getting the best information, and our listeners, like you. We make that information available to you and make it simple and understandable.
Good investing means understanding how the stock market works. Join today at philsgang.com. When the stock market is up one day and down the next, you need experienced advice from a pro.
Hi, I'm Phil Grandy of philsgang.com. I know you're sitting there watching the stock market. You're going, what? Is this nuts? Market goes up 700 points. Next day it goes up 800 points. Then the market goes back down. Then it goes back up. What that is volatility.
You want to invest your money and grow your wealth. How do you invest intelligently?
But you got to anticipate what's going to happen with the market. And that's what we give you. Information so you can anticipate in advance what the market's going to do, so you know what stocks to buy, you know what stocks to short. It's all about having good information and anticipation. You got to anticipate. The one thing you can't do is rely on your brokers. Listen.
Our responsibility begins and ends with our partners and our shareholders, and that's it.
What are you, nuts? Partners and shareholders? You're not included.
Check out the free 10-day trial and follow Phil to investing success. Learn more at philsgang.com. philsgang.com. Want the truth when investing in the stock market? Here's how.
Hi, I'm Phil Grandy at philsgang.com. Listen to my radio show every day because that's where you're going to get the truth. You're not going to get the truth listening to these dopes on Fake Business News Network. The other day, Kramer said, don't listen to the banks. They're giving you wrong information. When he told you to buy Merrill Lynch, remember? And what happened? They went broke.
Get the truth at philsgang.com.
Join my gang, philsgang.com. Get the truth. And also listen to me on my podcast on YouTube and Rumble. That's philsgang.com.
I believe that every single human being with a laptop computer and an internet connection should be required to give trading at least a shot.
Following Phil, his charting system has really been a huge impact on my career and my life.
I believe that every educated individual on planet Earth.
I would recommend Phil's Gang to the mom and pop out there. I would recommend it to parents teaching their children. I would recommend it to grandparents.
Should do this. It's not for every single human being on Earth. I know this. But it's one of those things that you should try, because if you happen to get it right, if you happen to be one of the ones that this is for.
Follow the money. Follow Phil Grandy.
Oh my God.
Hi, I'm Phil Grandy at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free.
What's in front of you is a life of incredible joy, freedom, and independence.
Philsgang.com. What, are you nuts? If the stock market can make you so rich, especially Apple and Microsoft and Google and Amazon and the rest, why are so many Americans poor? If the 401k promises you a retirement, then why is it we are in a retirement crisis? Here's the answer. Because 85% of you get out of the market too late. I fixed that with my color-coded chart, which tells you when to buy, when to sell, and when to get out. That's right, when to run like hell. Check it out. You get a free membership and the free color-coded chart for 10 days. Check it out, philsgang.com. What, are you nuts? Coffee's up 92%. Lumber's up 67%. Heating oil, what, 60%? Gasoline, 55%. I understand why you guys are telling me to raise my rates here at Phil's Gang, but we haven't raised our rates since 2001. Hi, I'm Phil Grandy at philsgang.com. I'm not going to raise my rates. Our membership's been $39.95 since 2001, and for a good reason. so that you have enough room that when you do make money here at Phil's Gang, and you will, because you're going to learn how to short stocks, that there's enough room to send some money to St. Jude. That's why we never raised our price. And that's why we give you good value. So, you want to continue with good value, good information, be on the right side of the market? Join my gang, philsgang.com, where the price has not moved, where we fight inflation. philsgang.com.
Welcome back to the Phil's Gang Radio Show. Want to know more about Phil's Gang? Go to philsgang.com or give us a call at 877-600-4264. Now, here's Phil.
Hey, good afternoon, gang. It's Steve Celeste here with philsgang.com. Just wanted to tell you how to get engaged with Phil's Gang and how to become part of the Phil's Gang membership or how to try us for 10 days free. Simply go to philsgang.com. That's www.philsgang.com and click on Get Started at the top of the website. Click on the big red banner that says Working Investor 10-day free trial, and that's all you got to do. And hey, while you're at the website, why not stop by our gift shop, see if there's something in there for you or for somebody you know. All right, thanks, and back to you, Phil.
Thank you, Steve. So again, join our gang. 10 days free. You'll meet Steve, Willie, myself. And during that 10 days, you're going to get an education you can't get at Harvard. And you're not going to have to pay a penny. And you'll get to use our color-coded chart. It's a beautiful thing. It tells you when to buy, when to sell. And it's never wrong. And at the end of 10 days, you can make that judgment. You don't have to believe me. But the understanding during that 10 days is you're going to learn how to sell short and how the market works. Talking about the market, I want to just wrap this up. I don't want to go too far with this. So here's the bottom line. Markets used to always go up with earnings. And then from earnings, okay, you'd have productivity. And from productivity, okay, you'd have increase in wages, increase in jobs. And then people would have a better standard of living. They spend money, then your economy grows. We haven't had any of that, none of that. And if you go back to the dot-com, remember, from 1998 to 2001, that dot-com, they would have never had that dot-com bubble unless there was liquidity. Remember, all these startups, you needed liquidity. They had to put liquidity into the economy, into the market. You need liquidity. And then remember, during the dot-com, what happened? CNBC, Kramer, he started that whole thing. He would go on air, or his buddy, I can't think of his name, he's still on air with him every morning. And he said, oh, yeah, we got this hot stock. It's a $5, a hot stock. You got to buy it. And then and they would pump the hell out of these stocks. Even Maria, who I love, she even did the same thing. Then she stopped, though, because she knew what was going on. And they were pumping these stocks were at $5, and by noon, they're $85 or $105. So anyways, but that would have never happened, my point, unless you had an injection of liquidity. And then when Bush, after 2/11, he didn't know what the hell to do. The economy was on its back. So let's start a housing market. 9/11, really, started a housing market. And the only way he could do that is if he increased the liquidity. Liquidity. It wasn't earnings that started, liquidity. So they threw more liquidity into the economy. This way here, they were able to take that liquidity and go buy from the banks the mortgages that are sitting on their balance sheet. Because back then, very seldom did they sell mortgages. They would always hold them. So if you had good credit. So they also now, they said, give me all your mortgages. Look at the cash you got. Look at the liquidity you got. We're going to now turn around and drop rates. And we're going to drop credit scores. You could have 150 on your credit score. Don't worry. It was that liquidity that would have never happened unless we had that extra liquidity to go in there and buy from the banks the mortgages, to give those banks a pile of cash to push out the door with loans. So, .com would have never happened without increased liquidity, The housing bubble would never happen without increased liquidity. Then comes QE after the crash. After the crash, the housing crash, well, what are we going to do? Well, let's create another bubble. None of them wanted to go into a recession. Let's create another bubble. How about if we do a QE bubble? Yeah, that's a good idea. Let's do a QE bubble. What we'll do is go buy treasuries. We'll buy treasuries. The Fed will buy treasuries. And the more treasuries they buy, the more the yields will go down, and the tech stocks will go crazy. And guess what? With all that liquidity, we can take and loan money to the CEOs free. And they can buy their own stock, so they don't need to have profits to move up their prices. So prices went up 1,400%. Stock prices went up 1,400% to NASDAQ. Not on earnings, not on business investment, not on margins, on liquidity. None of this would have happened. So now you had the housing.com scam, you had the housing scam, you had the QE scam. Now what happens? COVID comes 2020. Oh, what are we going to do? Hey, let's start another housing bubble, like what Bush did. Well, what do you need for that? Liquidity. So they inject all kinds of liquidity again into the market, to the economy, right? So they could have another housing bubble. Drop interest rates, same thing. All that liquidity, go and buy 10-year treasuries, get those yields down, bring those, get the Fed to drop rates to zero, and then go buy 10-year treasuries. Those yields will drop. And housing, they went nuts in 2020, 2022. Houses went up 40, 50, 60, 70. My neighborhood, about 70%, some of these crazy people. Okay, so now that was over. And now it's just simmering there, just ready to bust. Okay, at the same time with the commercial. But let's just stop with that. Now what happens? 2023. Uh-oh, the banks are starting to crash. Well, of course. Of course they're starting to crash. Because remember, the Senate and House Banking Committee, who's supposed to be overseeing the banks, told the banks, go ahead and buy treasuries where they're getting a yield of 1.5 and make a little profit on it. And then when they started to raise rates from 0 up to 4.25, they never told the banks. They never said, well, we better not do that because the banks will collapse. We're putting the banks out of business. Every time we raise rates, they're losing money because they got these stupid bonds. They're only giving them yields of 1.5%, and we're our interest rates are going up. Didn't anybody think about that? But anyways, the point is, that would have never happened without liquidity. You had to have liquidity. That wouldn't have happened. So they put in, so this is what I mean, to make sure the stock market didn't crash, they came in with they printed $400 billion. They put $400 billion in liquidity in 2 weeks. And guess what? We were talking about the $5 trillion that's in this market liquidity that's in here now. It was in 2001. Guess where it is now? It's at 16. Is it right? Yeah, 16 trillion. Or is it more than that? 20 trillion. 20 trillion. So we've gone from 5 trillion in 2001, starting with remember, that's when we started with the .com. And then every time the market was ready to crash, we'd come back again. They won't let the market stay down. And that's the reason why you feel, why is the market going down? Why is it delayed? Because how do you get this liquidity out of the market? You raise rates. But wait a minute. While they're raising rates, telling us they're fighting inflation to get liquidity out of the market, what are they doing? In the back door, they're shoving in more liquidity. They're shoving in more liquidity in the back door. So telling us they're raising rates. Why do they raise rates? To get liquidity out of the system. You raise rates to stop demand, to get that liquidity out of the system that you put in. But they're not doing that. Because why? Because this liquidity benefits who? The very, very wealthy. But this will all crater on its own. Because at one point, okay, This market can't keep, you can't have this. If you don't start taking liquidity out of this market by raising rates to 8-10% quickly, you're going to have, you don't think there's going to be a crash? They're going to go through that October bottom so fast, but nobody wants to believe it. Nobody wants to believe it. More when I come back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG. Why are investors listening to Phil Grandy of philsgang.com?
You know why people listen to my show? Because I make it simple. When you talk about the stock market, they make it so complicated. I make it easy to understand. For the average investor, the Main Street investor, most of the time, these guys, like they're talking to each other. We talk directly to you and we listen to you.
Invest better with the sound advice of Phil Grandy at philsgang.com. Are you a stock market investor without all the information?
What are you, nuts? Market's going up, market's going down. We're getting all this bad information.
How do you invest intelligently? Phil Grandy can show you.
If you want real information and you really want to know what the market's going to do and you want the truth, go to my site, philsgang.com, and also listen to me on my radio show every weekday at 3 o'clock Eastern.
Phil's got the answers at philsgang.com.
That's philsgang.com, where you get the truth and you get the information you need about the market.
Phil Grandy has successfully taught tens of thousands of investors how to navigate the market with confidence.
Hi, I'm Phil Grandy at philsgang.com. That's right, philsgang.com. Join my gang for 10 days. It's free. If anything, during that 10-day period, you're going to learn how the market really works. You're going to find information that you never had before. You're going to walk away and go, I didn't know that. So join my gang for 10 days free, philsgang.com. And you're also going to learn how to make money when the market goes down. It's kind of silly just sitting there when the market going down, hoping. Why hope when you can sell short and make money? Either way, you make money when the market goes up, you make money when the market goes down. That's the benefit of Phil's Gang. You make money.
Become a Phil's Gang member and receive the training, advice, and software that will take your investing to the next level.
philsgang.com. Sign up free for 10 days.
Short on time but want to invest in the stock market? Let philsgang.com help you. For only $39.95 a month, you get complete access to all of Phil's powerful investing programs, videos, and resources.
That works for me. Log in, watch the videos, and make profits.
Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. philsgang.com. With the philsgang.com membership, we bring investors right to the floor, into the pits with Phil's daily live webinar classroom. Get inside market guidance on investing strategies. Find out more at philsgang.com or call 877-600-GANG. That's 877-600-4264. Don't have time to analyze and study stocks? At philsgang.com, we recognize that there are all types of investors, and we also recognize that your time is valuable. So we offer investing programs for all individuals. We offer investing programs for long-term and short-term positions. And philsgang.com provides quick and easy to understand investing videos that only take a few minutes to watch. With the philsgang.com investing programs, you will learn technical stock charting, how to execute your trades, and most importantly, you will gain the confidence to know when to get out of a stock and take profits. Sign up at philsgang.com. That's philsgang.com. Or give them a call, 877-600-GANG.
Hi, I'm Phil Grandy at philsgang.com. You know, I've been doing this business of trading over 55 years. God, they make it so complicated. It doesn't have to be. The best way to learn is to follow me, my actual investments. That's right. When I buy a stock, you follow me. Do exactly what I do. That's the best way to learn.
Check out the free 10-day trial. Learn more at philsgang.com.
Be my co-pilot at philsgang.com. Do what I do.
That's philsgang.com. Welcome back. Are you ready to make profits in the stock market? Why not check out philsgang.com or give us a call at 877-600-4264. 4264. Now, here's Phil.
Welcome back to Phil's Gang. So wrap up this liquidity. Understand this. The consequences of this excess liquidity, they can force interest rates to be low. And that's what they did. Remember? It started out first with the Bush housing. He kept rates so low anybody could buy a house, right? But here's the thing. When you have this excess liquidity, that means cheaper money for companies to go out and borrow. Now, that would be okay because that would help your economy recover from our financial mishaps or crisis. And then it would also allow the banking system to build up a buffer of liquidity. But this only works if, when the companies get cheap money, that they plow it back into business investment, new machinery, new equipment to increase productivity. But what they've been doing with all this excess liquidity is they've been using it, okay, not to use as business investment for new machinery equipment. They've been using it for stock buybacks. That's why we had a 1,400% rally since 2008 to today. So you understand? So if anyone tells you this market, oh, it's never going to crash, really? Now, that would have been the case if all this liquidity from $5 trillion that they had in 2001 to where we are today, 20 trillion, if all of that money was put into business investment, if that money, and then companies also took their profits and plowed it back into business investment and to productivity. But no, they decided they're going to use all that money for stock buybacks, going to use all this QE zero rate money to buy their own shares down, to artificially push up their stocks. That's why, again, when you hear, oh, there's never going to be a crash, we're not going to take out the October low. Yes, we are. There's no question about it. Again, the answer would be no, we wouldn't be taking out the October low if they took all that cheap money and put it in the business, plowed it back in as business. They didn't. They're using all that money to benefit their greedy selves, the CEOs. And remember, the company didn't benefit, the employees didn't benefit, the country doesn't benefit. Now you would think somebody at Congress would say, wait a minute, what the hell are they doing here? But they're as crooked as a pretzel too. They're as crooked as a corkscrew, the people in Congress. Because remember, they're trading stocks. I mean, so again, if you understand this, and then you can say, gee, I get it now. I understand it was all this liquidity from $5 trillion to $20 trillion. That's what drove this whole stock market up, but it didn't drive our economy because our economy is growing at less than 1.5%. What does that tell you? And then we got an inverted yield curve. What's that tell you? And then we got huge trade deficits. And now we got credit tightening. We got distressed commercial sales. That hasn't hit us yet. We have the highest credit card debt with the lowest savings. Are you kidding me? So again, we got some real problems, but you don't have and we got the lowest productivity coming out of our companies in 28 years because they don't care. When you got cargo ships, when their demand is the lowest in 22 years, they're not shipping products. What's that tell you? Unbelievable. And our trade deficits are killing us. So my point is that the way you make money in this market is if you understand that, it doesn't mean you don't buy stocks. Of course not. Just the opposite. You do buy stocks. Look at the stocks we bought during QE. But always in the back of your mind, you're playing defense because you know one day this thing is going to collapse. And that's why if you join our gang and work with myself, Steve, and Willie, if you work with us, you'll be able to identify before it turns, before the market turns and drops. Everybody gets caught in that drop because they don't want to believe there's going to be a crash. And they just keep buying stocks. And when you have this tremendous liquidity in the market, why would anybody not buy stocks? Because it keeps rates low. Our rates are still low. For God's sakes. 5.25%? That's nothing. That's not preventing guys on Wall Street cutting deals. What are you, nuts? Of course not. So, as I pointed out in the last segment, we don't sit here and say, oh, we know a crash is coming, we're not going to buy stocks. Just the opposite. We bought all these stocks. We bought Meta. We bought Microsoft. We bought Amazon. I mean, these are our stocks. We've been in them a long time. Microsoft, Meta, Apple, Apple, NVIDIA, Amazon. And we've had some real healthy returns on those. And then we're also in banks. JP Morgan, Goldman Sachs, Citi, Morgan Stanley, Wells Fargo. That's where all the money goes. And then we got our oil stocks. Our Baker stock just took off. We took money from the profits we made in big tech and we put it in Baker. It's an oil service company. And that took off big. And then we had our Goldman Sachs. That's doing really well. So that's what I was trying to explain yesterday. Again, remember, you're not going to form a solid bottom until you fix what caused the 38% crash from November of 2021 to December of 2022. You got to know what caused that crash, and that's got to be fixed. But they don't want to fix it because what is it? They don't want to fix that. They want to keep putting more and more liquidity in, keep pumping money into this market, so to keep interest rates low, so CEOs can keep going buying their own shares. And I mean, think about stock buybacks, how crooked that is. They go in every day and buy their own shares. So if you got 1 million shares and your stock's at $25, now you want to get it up to 50, and the CEO has options. Every time that stock goes up, he's making a fortune. So all he does is get money free. You got 1 million shares. He's going to say, "Well, I'm going to buy back." So we only 200,000. So we only got 800,000 shares. Now the stock goes from $25 to $35. And that's how they do it. And it goes on. And then all of a sudden you got stocks that are so overvalued. Now let me tell you, this housing boom that we are in, are you kidding me? People are already regretting they bought these houses between 2021 and 2020 and the end of 2022. They know they're screwed. They know they paid way too much for those houses. And what's going to happen to them when they try to go sell them? They're screwed because builders are going to undercut them big time. But because people could get an inexpensive mortgage, they went out and they bought everything and anything. You could get a mortgage at 2.3%, all that was a big bear trap to get you. Anybody who bought between 2020 and 2023, you're so screwed. I hate to tell you that. But because if your house between 2020 and 2023 went from 500,000 to now 1.5 million, like here in Sarasota, are you kidding me? Are you kidding me? And they did. But now they're starting to find out they can't get buyers because people are catching on. People are catching on. And now there's going to be a lot of people are going to be upside down because interest rates are so low. They said, I'm not going to put 20 or 30% down because the money's so cheap. I'm going to put 10% down, but you could get loans at 10%. I'm going to take the rest of the money and I'm going to buy NVIDIA. I'm going to buy Apple. That's what they did. So they took all their extra money and they went and bought Apple. Look, if right now what you want to be doing as we're rotating out of these tech stocks and you're going into your airlines, your industrials, your cruise lines, be very, very careful, okay? Because this market is really, really struggling. It's running out of volume because the institutions are not here. They're not here buying. They're not participating. So please join our gang so at least you can learn how to sell short and understand really how the market works and how to use yields so that you know what to do. Understanding what yields do up and down, boy, that helps you.
You have been listening to Phil's Gang with your host, Phil Grandy, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.